Realty is an open air shopping center company. We're a national platform. We're in 24 states. We own about 28 million square feet, almost like 190 properties. And generally it's grocery anchored or shopping centers that have a grocery component is like, I think it's up to 70% of our business. Actually, I think 80% now. And about 70% of those properties are in the Southeast. So it's or Sunbelt. We would define it as Sunbelt actually. So it's a pretty straightforward business, open air retail with excellent anchors and lots of opportunities for shoppers. You know, sometimes people overcomplicate this business, but we're a last mile delivery platform. We also have about 20% of our business is in very high end lifestyle mixed use, much like Legacy West in Dallas that we recently just bought. Another asset in Dallas would be South Lake, which is, you know, at the same kind of level as Legacy West. And then another example would be One Loudoun in Loudoun County, Virginia. So we have this unique we have our bread and butter grocery anchored community shopping centers, and we have our higher end, you know, lifestyle mixed use in gateway market type properties. And that's about 20% of our business. So we kind of pride ourselves, David, as being real estate operators. We have some of the best margins in the business. We have for several years, like some of the highest NOI margins, lowest G&A to revenue ratios, great recovery ratios. So we're operators. We're kind of like real estate people. That's how I would describe it. But we've been very successful at both developing and buying properties. Sure. Well, we have a really interesting backstory. The company the predecessor company was in the painting and drywall contracting business, which was founded by my father in the 1960s. So I'm pretty certain that we're the only $9 billion real estate company that was founded as a drywall company. So it's kind of a cool kind of, good old American growth story. In the 1980s, the business kind of started morphing a little bit more into real estate. My brother joined the business and he had a real estate background from Dallas. And then I was a commercial banker and I kind of joined the business in like 1990. And we started to really move the business from construction to real estate. And then by the time we got into the 90s, the business had become much more retail focused. Earlier on, we did all types of product types, office, retail, industrial, some multifamily, hotels. But then we kind of narrowed the business in the 90s, and so much so that in 2004, we were able to take the company public, which at that time it was small, but predominantly retail. I think the market cap when we went public was probably, $350 million, and today it's around $5 billion. So we've seen significant growth. But I think we also, backstory-wise, we've done 2 large mergers, which is unique in our space. So in 2014, we did a merger with Inland Diversified, which doubled the size of our company. And then again in 2021, we merged with RPAI and again doubled the size of our company. I think the other major thing that happened during that period of time was deleveraging, which is hard to do. And in 2019, we significantly delevered by selling about 20% of our portfolio and got our leverage down. And, it was obviously good timing because 2020 was COVID. And that was a challenging time. But today, our balance sheets, because of that and other things that we've done along the way, our balance sheet's one of the best in the sector. We're 4.7 times net debt to EBITDA. With almost $2 billion of liquidity. So we're in a very good position. Well, I think the long-term trends and the bull thesis, look, I think this is a great time to be investing in open air retail, a really good time. There's been almost no new supply of open air retail in the last 15 years. That's a long time. In fact, if you look at, supply charts, they went like this and they've gone like that over the last, say, 30 years. So our product is desired by retailers. Retailers understand that the most profitable form of distribution of product is in a shopping center. It's not online, which is extremely expensive to acquire customers and distribute the product vis-a-vis distribution channels. You send it to one place, it might go to one logistics facility to the stores. Boom, it's much more profitable. People drive there. They're spending their own money to get there. Now we've got to deliver a great product to the consumer. I mean, we think of the customer base for us, retails and consumers are our customers. So again, on the bull thesis, very little supply, demand is good. It's a profitable distribution point for the retailers. And, I think COVID tested everybody's way of living. And in the very beginning in COVID, it seemed as though, oh boy, online retail is going to finally kill, physical retail because no one's going anywhere, right? Well, guess what? They figured out, I don't want to be at my damn house all day. I need to get out. I need to go places. I need to interact. I need to socialize. And I want to be able to make my own choices with the products. I want to see them and pick them and try them on. So I think COVID in a kind of warped way really accelerated the business, made everybody understand that this is sustainable. Also, that our growth rates are now in line with a lot of other sectors at much bigger discounts. I mean, our case in general, our cash flow is extremely discounted for the investor. So I think the bull case, I feel very good about the long-term prospects of open air retail. Yeah, I mean, I think the bear thesis or, things that keep you up at night, obviously we're tethered to the overall consumer, which is impacted by geopolitical events. And right now is a perfect example of the ebbs and flows of what a particular administration can do. We're in an environment where there's a lot of headline risk, makes people antsy. That's when you see people maybe pull back a little bit, maybe not spend as much. But I think that might keep me up, but what gets me to sleep is, again, very low supply. There is demand. We've experienced vacancies. We've backfilled them with better retailers. I think the retailer balance sheets are much better today than they were 10 years ago. The tenants that were weak have kind of gone away, and there's only a handful of those left in my mind. So, and again, with no new product being built at scale, the pool that we have to choose from in terms of retailers that are interested in our properties is way deeper than it was. So that helps me get to sleep. And then what, maybe makes me sleep well is that our particular case, we have such a strong balance sheet, such a strong management team that we've had in place for a long time, cohesive, and we're real estate people, so we know how to operate. So I think, again, obviously we've got outside exogenous issues that can happen, that can impact the business, but I think we can power through it. And look, since the GFC in 08 and 09, and then COVID, we've had in the last, less than 20 years, 200-year events, and we've really withstood that. And in fact, come out the other end stronger. And when you look at a price per pound, you look at what retail trades at per square foot and cap rates, et cetera. If I'm an investor, that's a really good place to be versus other kind of sexier, higher growth, huge multiples, very low, premium to cash flow. I'd rather be in retail. Yeah. I think I covered a little bit. Number one, we view ourselves, we've been in this business a long time. As I said, I got in this in 1990. We're real estate people. When you look at the public landscape, there's not a lot of people around like us anymore that have kind of grown up in this business, seen all the cycles, managed through them, have super strong balance sheets, and know where to pick our spots to invest, i.e. the recent acquisition of Legacy West, an iconic property that we were able to get at we feel like a very, very attractive price. So, and also just the fact that we own great real estate, and we have this kind of barbell situation where we own really high quality grocery anchored and community centers with grocers. That's the bread and butter, complemented by this high-end mixed use, higher growth piece of our business. distributed throughout the country with an emphasis on the Sunbelt. And again, at a discount. So I think that differentiates us.